So at XRP, I'll just do a little bit of a zoom out and have a look at this chart, yeah? So just with this breakout and then the consolidation is, with the consolidation pattern, this one I always thought was a little tricky because of this movement here, yeah? And I'll explain why. I'll explain why by just going through this. So you can see here is you get the drop from the top, you get the drop, you get the reset back to the top, now you get the bottom, you get the higher high, didn't get the lower low here, but it was like a double bottom. You come up, you get your 0.5 or so, there's your final peak, your final bounce. Here's your fake out, gets rejection at the top, and then you get the spill down, yeah? So this is why this one is tricky, is you get the drop here. So the probably have to go to here actually. And this is why it's tricky, is here's the you reset the top, there's back to the bottom again. Here you get your higher high. Again, you get your drop, and it seems, this is where it gets a bit tricky. It seems like, okay, you get your double bottom again, but really you get your lower low. So now you get your lower low here. You get your lift back to the top. Excuse me. You get your drop, and now it seems like we're breaking up. That's what it looks like, yeah, at the moment. Now the tricky part is there was very rapid drops here, like there was a day up, a day, a lot of movements. So this could be read two ways. Is I'll change the color of this now. This could be dragged out where you get your drop here is back to the top. Now you get your lower low here. Now we're on the higher high here. So we get the higher high, might even go a little higher. Then you get your lower low. And then we're back to the top. And then we get our movement like this. So this consolidation is tricky because of this. I'm inclined to think it's the first one, simply because of well, I'm going to maybe correct myself there. I was going to say because of the length of time, yeah. But then when you look at this one is drawn out as well. So, okay, maybe I take that back. Maybe it's the red option rather than the yellow option, where it's actually far more drawn out. And this is where we're getting our top here. Because I do believe that we overall need a lower low here. So this is the low. We need a lower low below here before we start going too high. That's what it seems like. So I'm still of the opinion that before we head up and test 55, that we need to come down and do a lower low below 28.60 or so. Yeah, that's what it seems like to me. So now the question is price action is up here, and actually if I zoom out a little bit more, if you look at this consolidation from here, just to look for the confluence. Again, look, you get the drop, you get the lift back up to set the high, you've got the bottom below here, you've got your higher high again. Now when we come down, we get a double bottom. So we don't necessarily always have to have a lower low, but we are actually due a lower low on different multiple time frames, but we haven't got it yet. So it's possible that again in this consolidation range, you can look, we're at the top of the resistance line here, yeah, at 43.50. So we may get a rejection here, and if we get a rejection here again, I think we're coming down for that lower low. And then I think we'll have our lift up to test 55 or so. But we got to see. Even on this time frame, maybe it's doing a double bottom rather than a lower low. And now we're back up, bouncing off here. If this is the case, normally what we would get still is that we get a retrace back to the center line or so generally, and then it decides its new direction, yeah. So even with it coming up to here, I would still be looking at some sort of retrace. Excuse me, before it decides its real direction, yeah. So that's what it seems like. So now, when we zoom in here, let's just have a look. You know what? I'll stay here for now. Just zoom in like this. I'm also mindful of this ascending channel, yeah, and that we've only had 2 levels. We're due a third level down, yeah. So again, I still think there's a target down here around 20, 26, 27. But when we zoom in and we look at the pattern going on, yeah. Now, I haven't done this, but I'm just wondering if we did do it, would we get a channel here? Just out of curiosity. Okay. So nice and simple. There's one there. So we've got our first touch here. 1, 2, 3, and again potentially 4. This is suggesting that if we're going to have a 4, we're heading up to 45.50 or so. Okay, just out of curiosity. When we put the fibs on, is you can see that there was a drop from here to here. So when I take the bottom here to the top here, I run it across. We take it up here, it's broken the 1618, 1786. We're up there nearly at the 2. Potentially could be heading up to the 272, a full impulsive move. Again, that's at 46.13. And then when we go onto the fibs, I'm going to look at the monthly. Because the monthly has been green so far. And the reason why I'm going on to the monthly is you can see at the moment it has come up. It's going to come up, and it's putting the wick. It's wicked into the 10, coming down on the 5. Yeah. So that's quite a bit of resistance there. You can see it's really struggling around this area. Took quite a while to break the 42. It's got a little bit above it. You can see there's a resistance line here at 44.24. The next resistance on the weekly would be the medial Bollinger line at 47.91. Yeah. or sorry, on the monthly. When we look on the weekly, it has got through, and it's at the Bollinger on the weekly again, strong resistance. It's got the support here of the 20 EMA. I think if we were looking at a reversal, is you want to see the 20 EMA on the weekly break before I think we'd have confidence that it's coming down properly. Yeah, so that would be at 39.69 or so. If it breaks the Bollinger, again, the next set of EMAs is the 50 up here at a 47 or so. Yeah, between 47 range to 49 range. And then we went to the daily. Again, the next level up, we think that's the 200. I think that's the 200 SMA. Yeah, the 200 SMA up at 49.74, and that's the 377 EMA. Again, around the 49 range. Yeah. So now let me zoom in a little closer and have a look. Have a look at how we're doing. Again, it looks, when you look at the line of MAs like this, it looks very pumpy. The only thing about it is I don't think the MAs matter so much as the VWAP, because if you look, it's constantly the VWAP leading the pump. It will be different if you had the VWAP and the MAs pump, then the 5 breaks through the VWAP and pumps and continues, and the VWAP is support, but yet it's the MAs are pumping. So that would be I would see that as retail pumping. When you see the VWAP leading the pump, that's the market makers. The market makers are driving up price action, and the reason why I think they're doing it is I think they want to bring it to a price to get retail to sell, not to buy. They're not looking for retail to sell here. Oh, sorry, to buy. I think they're looking for retail to sell. They want to get them to sell out, can bring it up to a price where they go, look, I can get out of here and break even, and then get out of a bad trade, sell it off, and then I think they're going to tank the market and freak retail out and get the weak hands to shake out then as well. Yeah, so that's what I think is actually going on. So it's just a question of how far the market makers want to take this. It's really whales. The majority of this will be a whale selling to another whale, one wallet going to another. So possibly even the same fucking whale, you know. So on the daily, the MAs look like they're ready to just keep pumping, yeah. So in some ways, when it gets like this, I don't think the MAs matter so much, because when a whale decides to pull it down, this will just tank. You'll just see a big red candle break the back of it. So now it is 12, so the 10-hour turned. Partly why I'm saying that is because this pattern here was a fantastic reversal pattern. It was doing everything it needed to do. You know, it cut support here and then it just popped. Equally here, you could say it had done everything it needed to do to reverse here, and then it just went up. So you're looking at the MA reversal patterns here working out absolutely beautifully, and then things just flip on their head. They just flip on their head, you know. So yeah, I think that's done to practically catch people out. Right in the last moment when there's a proper reversal coming in, is the VWAP just starts to push everything up. So that's what I think is happening. Same the 12-hour. Got to see what I think the VWAP's probably going to go sideways here. The 10-hour just turned. Again, there's the VWAP going sideways. Yeah. So let me just click in. Not to waste too much time now on the rest of these. I'm just zooming into the 4-hour and the hour just to have a look. Yeah. Now it is doing a very nice reversal short, but again it's tricky. It's tricky because of the way the market is, yeah. But if you were to look for it, you would look at from the bottom down here, this drop here. There's the range on the 4 hour. There's the 702 at 42.70. $43.32, so $43.42. That would be the stop loss. Now I was noticing here. Let me clear out there like that. I was looking at this, mapping this out the other day, yeah, just to see if I could find it. So you have this 1-2. This could be the push away, where potentially could be getting offered a W pattern here, where you get 1 scoop, 2 scoop, potentially could be getting a third. You get a deeper drawback, and then you get 5. Yeah, you get the topping out like this. Yeah. So I was just wondering, is that pattern shown? I'm not so sure about it. But I was just wondering, is it shown itself? Yeah. It's a bit hard to read. But again, I am of the opinion is the market makers are going to take this to where they're going to take it. I do also think that there's a certain psychological restriction to how far they can take it as well, yeah. And I'll show you this part. I'm going to go onto the Wyckoff accumulation, yeah. So excuse me. So here again, this is a pattern that repeats itself over and over. So at the moment, from the drop here in the smaller time frame on the 4 hour, again we have this pattern. I was suggesting that between the AOR and the peak here, it was going to hold, yeah, 42 or so. Now it's after breaking above. So again, it's a general pattern. So nothing's written in stone. So if it was to reverse here, I would suggest that it still holds. And we'll see. I was also telling you as well that remember that this might be reading this a bit too early here, in the sense that we have rather than the AOR being here, is the AOR is here. So now we're getting the lift. Now we're getting the lift to the top. So rather than playing all this out so fast, it's drawing out over a longer period of time. Remember what I was saying about here? Remember about this here? Is this all this movement here is very choppy, happened very fast. So most possibly that we're playing out the longer pattern here, rather than a shorter one, yeah. So I'll need to reset. I'll need to look at resetting my 4 hour. Possibly here, yeah. So when I go to the 12 hour, 12 hour, you could also probably say it's the daily as well, yeah. You can see again from the drop here, because look, this is one level, so now we get the spill from the second level. So you can see that the range here between the AOR and the top is much more significant. So it's between 38.8 and 53 or 55, yeah. So you can see that we haven't had our lower low here. This always happens. We haven't had it yet. So we get a 1, 2, 3 down here, an ABC down here, and again, I don't believe we've had it. I don't believe we've had it. So the range on this is, I don't think it's gonna go all the way up to 50 or 55. I might, but I don't think it will, simply because we need our ABC down here, need our lower low, and then we head up and we start to challenge this space, yeah. So that's what it seems like to me. And I think when I extend out my 4-hour chart, that will make sense. That will make sense. That rather than us being here in the 4-hour, we're actually here. That this peak here is the AOR, and that we're coming up to our mountain peak here, yeah. So generally that range would be, if I put a fib on, generally what I would do here is that from the bottom, here's the top, is I put a fib on, and I would be looking at a 702 to a 786 range. So the 786 range would be 45.5. So 45 to 46 range would be it. Sometimes it can go a little higher, yeah. And again, you can see there's a level here. So that, there we go. If I put that on somewhere around, if you look at the 44.3, 44.40 might be the top out range at thereabouts. Might wick a little bit, go a little bit higher to it, yeah. So that would make sense. I've got to reset. I have to reset the 4-hour. The 4-hour because of that, yeah. Is yeah, I knew all this fecky movement in here would be tricky. It's very confusing. So I think that might be the case. We're getting much more drawn out play here. Okay, so that's what I reckon, yeah. So now here on the 4-hour, again you can see there's quite a few rejection wicks. Excuse me, there's quite a few rejection wicks. So we'll see if this reversal works. Where would the target be? Again, if it's the real reversal, is, I think the target is a minimum. And again, I put the fib on from, let's assume this is the top for now, to the bottom here. And I think there's a minimum target here, looking at the 1,272 of 26 range. I think we're at least looking at a 26. We went to the 41414. There's the 2469 range. So I definitely think we're heading down around that range. At least the 1,272 at 26 range. Definitely doing a lower low. I'd be shocked if we don't do a lower low. So that's it. That's me for now. That's me for now.
Good morning, everyone. Good morning, Michael. Good morning, Lee. Let's see where we are today. Now, I won't be jumping into the coin straight away. I'll just give a brief presentation of the calendar. That's because we have news that have started going out today, and we've already seen some volatility in the market today because of the news. So we've had the flash manufacturing PMI and the flash services PMI for the pound, and we're going to have the same for the dollar later, which will no doubt bring some volatility. Now, the flash manufacturing was a little bit higher, whereas the flash services PMI was lower than expected. 50 is the mark for an economy that is growing, and it is way below the expectation, and also below that number. I was reading the article summarizing the news, and I went into here. I went into the original news release, just to see how these numbers are to be read and understood. And I read through this, and I want to get the conclusion. So what the conclusion said was in line with what I keep seeing in the news lately. I keep seeing some positive news and then some very worrying news. So yesterday I was reading about how the Eurozone looks like they're gonna avoid a recession this year. But then the ECB president came out saying rates are gonna keep going because inflation is already too high. And so they're the two extremes of the economic situation being played out in what is communicated to us, to the market. And the same thing happened here. They said January saw a second-rate level of performance from private sector business, with the sharpest fall in output since January 2021, so in 2 years' time. But some bright spots appear on the horizon in terms of inflation and optimism to balance out the gloomy numbers. And again, at the end, supply chain managers commented on improved times for raw material deliveries, and optimism amongst private sector firms was the best for 8 months, signaling a downturn may not be as long and protracted as feared. So again, a mixed bag of signals coming from the economic markers and their interpretation. Based on this mixed bag, we've had some interesting moves yesterday. The S&P went up. Not only did it bounce off, let me switch off the trader's reality indicator for now. So not only did it break the divergence line and the 20 MA on the 4 hour, it's right now at the top of the Bollinger, but it also found support on the 800 EMA on the 4 hour, which is pretty solid support. And combined with the stock RSI turning up on the 4 hour, that is a strong signal for continuation. If I was to look at this, I'd say it is continuing. Where to now? This is where I'll go into the technicals, and I'll stick to the technicals from now on, because I believe that the fundamentals are just market maker manipulation of perspective. But the technicals, I would say the technicals tell the truth, the real truth of the situation. We are on close to a daily level here at the yellow line. So at the moment, we're in the middle of nowhere for the S&P, because we need to reach that edge. So when I was doing the session on Thursday, I told you that when we're in the middle of the range, we're in the middle of the range. We can't say it'll look both ways considering different time frames in that range. So it does look like we are going to go up and continue upwards on the 4 hour. Just a second. So it does look like we're going to continue upwards on the 4 hour. We need to see how that edge is met, how that line of support and resistance is met as traders, to determine what's going to happen from that moment onwards. Because two things can happen. The first one, which I believe will happen, is reach that edge, not be able to break it as resistance, and then head down for probably a lower low. The second thing that can happen is reach that edge, consolidate on it, and then turn it into support and continue upwards. So this is what the S&P can do. Until it gets there, it is all FUD and FOMO towards both directions. So I would, again, I am looking at shorting opportunities for Bitcoin because I believe Bitcoin has reached the top of the edge. The same for XRP. I have my TA saying it's reached the 4-hour edge and it's gonna come down. But at the same time, I'm exercising extreme risk management. At the moment, I am in 2 shorts and I have half of my position for Bitcoin because I know Bitcoin is not as volatile as XRP, and generally gives me a little bit more time to watch for the moves. And I'm 1/3 of my position in XRP, both of them with a 5% stop loss. So I am very very cautious about the amount I'm putting in. However, I do not want to, and I go in only on the limit orders, 702 for XRP and 0618 for Bitcoin. This is the simple thing that I'm doing, and I am watching my 4-hour range as my guideline, because I believe in these times when there's so many voices going about the market saying it's going to do this or that, I need to simplify it down to a strategy. And again, it's the risk-reward ratio and the smaller size position that would allow me to do that and to keep trading it and look for a decent position. I will be DCAing only on confirmation and the back test of that confirmation, and I'll show you what that is for both of them, for both Ethereum and Bitcoin. Okay, now, so that was S&P yesterday. So keep in mind that the 4 hours of the S&P yesterday, the final 4 hours, were positive and finished with support. I'm going to change now to the DXY. Now the DXY also went up and found some support on the 20 on the 4 hour, and also it didn't break the previous low. So we have at the moment on the 4 hour what looks like a rounded bottom structure. And again, based on what happened in the S&P yesterday, I expected to see some tragic happenings in the DXY, which was not the case. Again, here we might be looking at this and we could say that, okay, maybe the support is here. We might have to do that if we do consolidate above the 20 on the daily. So if this is the bottom, we might have to adjust the levels. But at the moment, nothing is confirmed along those lines. So at the moment, this would be the level, and this would be the level because of the previous touches, not necessarily this one. But again, it would make sense to have it a little bit lower if this is the low that it turns up from. So I found that to be particularly interesting because with the lift that we had in the S&P, I expected a bigger drop for the dollar, but it didn't happen. Now, the shorter story is where we are with our coins, and I'll start with Bitcoin. I wanted to give you just a brief presentation because the coins themselves are exactly where they were 20 hours ago when I last posted on the chats. So we are holding the 22.8 level for Bitcoin. This is level 3 in this lift. Now, again, where we are right now, holding this level, the how can I say, the natural, the technical interpretation of holding a level of support is we're holding it to continue to move upward. So that would be the case. However, if that were the case, we wouldn't be turning down on the 4 hour. Also, on the 4 hour regular RSI, We haven't had a reset to the bottom since this whole lift started, since here. This didn't touch the bottom of the range. So technically, again, I don't see any continuation towards the 26, 25.5, 27 areas without a correction of the swing. I believe that this is the top of the range. The fact that this broke upwards, and then the second, and I'll tell you again, and it might be just my experience, and only that, but the fact that the second peak only went a little bit over this, over the first one, to me tells me that it is getting exhausted. Now we also have between this peak here and this peak here, we have decreasing volumes. Don't worry if the volume candle has a particular color. That really doesn't matter. It's just the color of the candle, but it doesn't matter. What we're looking at in terms of volumes is maintaining the momentum. And right now we have a divergence for volume, and of course we have a divergence for the RSI that is quite impressive. We've had a couple of them on the 4 hour. Let me check at the moment. I'm just having fun with this because it's ridiculous how many. 2, 4, 6, 8, 9. So again, we would normally have one as an indication of the market makers wanting to catch traders out, but now we have quite a few. Now where is my trade? Here is my trade. So here's my trade. This was the 0618 entry I got at the weekend, and this is my stop loss. Still in. Now, when will I be looking to DCA? Well, that's the... There we go. I will be watching the MAs. I will be watching the MAs on the 4 hour to DCA. And what I want to see is the breaking of the 20 and the back test of the 20. If I see the breaking of the 20, 1 4 hour candle close, second back test, and then continue down, that's when I'm going to DCA. And my target is going to be around the 702, though I will be carefully watching the 05 because that's the 50. Now on the 4 hour, when the MAs are like this is a sign for reversal. So I would be looking at, again, at least a 0.5 correction from where we are. That would be a decent trade, but it wouldn't be the 4 hour trade that I'm looking at. Would be all the way down to here, the next level, and then the next level down. So these would be the two levels that I would be watching for the 4 hour. The ones that we have here as well, slightly different. These ones are more precise than those ones. So this is, let me see if there's a confluence here. So the number that I'm watching is the 21.7 would be here, the 55, and here 20. No. The 4 hour 20 MA would give me a faster signal that the support is breaking. So something along these lines. So this is where I actually DCA'd here. So this is where I DCA'd here, and I got stop lossed out in this trade. So again, there are risks to be taken. You can absolutely wait for this confirmation, but a confirmation doesn't necessarily mean that it's going to keep going, because this, for instance, was a massive rug pull for traders. And if you didn't have stop losses, you would be, oh geez, very tough times. You would be around right now a 90% loss if you were liquidated already. So these are the peculiarities of where we are right now. Again, the size of the position is really important. Okay, So that's how I'm gonna look to manage my trade. I'm gonna be watching the 20 MA on the 4-hour. I would be looking to take profit at the 702, possibly the 786, depending on how it's going. If I am asleep, I told you that if I'm asleep, I put the 702. If I'm not asleep, I will put the 786 and keep watching it. So, because it might stop around the golden pocket, it might stop around the 702, or it might just keep pummeling down to the 200, which is where I believe it's gonna eventually end up. Because that would be the overall correction down to here, the 702. So it would make perfect sense to get there. There we go. Now, that is Bitcoin. Again, we haven't had any particular change except for the stochastic on the 4-hour that has crossed down. And then let me check the day. The day is still up, trying to go up, and the week I believe is still up. Yeah. Okay, so that the 4-hour is the only one that is turned down at the moment, signaling that the top of the range is in. We do have though some I'll call them bullish indicators. We have the third week starting above the 20 EMA on the weekly, which is quite strong. Since this drop here, it's the first time it's happened, and it's the second backtest of the 20. And yeah, to me, it's not enough to have just 2 backtests. I believe that this will keep going down, but we'll have to see. We'll have to see where that's going to take us. Okay, the next one is Ethereum. Same situation. I'm going to be using the, for instance, Ethereum right now. Ethereum right now is breaking the 20. It hasn't yet backtested it. Here it backtested happy times. Again, Ethereum, I believe, gave us a range at the weekend that it hasn't broken yet. And I think this one here was the 0618. I keep saying 702. There we go. This one actually was a 786, but both Ethereum and Bitcoin go more for the 0618, and also they have smaller ranges than XRP, so going for the 0618 ensures that you're getting in. Let's see, this one again was a little bit above 786, and let's see if this one is, and I'm just doing this for fun just to see how many entries we get here. This one was a 702, and I believe we have another one here. Yes, so all of these are super entries on the limit. So we have some super entries on the limits, and now we need to wait. Now we need to wait and see what's going to happen, because it's ranging sideways. We are still in this space. We haven't confirmed yet the backtest of the 20 MA, but it is broken. The 50 will be the next level, and here is the technical target of this channel. If it breaks out, I don't think it's yet ready to break out, because it would have another touch to the bottom, another touch to the top, so it would keep going on the 4-hour if it is a 4-hour consolidation channel. So it would keep going, but it would be a lovely channel to trade up and down if it does keep going, because it's 9% range. I do think that we're going to see some deeper correction. Now, again, a ridiculous number of bearish divergences since this swing started. We have 2, 4, 6, 8, 10, 11 divergences here. The stochastic on the 4-hour wants to turn down, and on the daily it is still pushing down, and we have a bearish divergence. Now, we also have great support on the day. So I can't dismiss the great support on the day, the 22.8, and for Ethereum the 1500 is great support because it's the 200 EMA. So we are holding support for the levels 1500 thereabouts on our hourly levels. To me, it looks like Ethereum hasn't had a level 3. It could have had a level 3 if we consider this is level 2, but again, it's only this bit here. So it looks like it has strength to go a little bit higher, but it has reached this edge. So you can see that this is how it went up previously as well. Like these two swings are quite remarkable in how Ethereum lifted, because it went from consolidation straight into this final lift. And if you were to take level 2 here and level 3 here, they would be very, very close. So very similar to here. I'm not saying that it has to get to a level 3, because if I look at the pattern of the previous swing, it was equally sudden. From consolidation straight up, consolidated there, turned down. And yes, here's another demonstration of why I think this is going to come down, because the second swing just came marginally above it, and this to me is generally a sign of losing strength, bit like what happened here. And it could come down only for correction and then continue upwards. That's also the case. Again, for Ethereum, I think I told you, yes, we're waiting for the back test, the second candle on the 4-hour. And yes, I believe it's worth the wait for that DCA, because if you take a position on the 1 hour with half of the capital, the DCA should be a little bit more careful, and you are in no rush, because again, this is a 4-hour range of around 9%, even deeper if it is going to go down to backtest the previous level of support and resistance here. So this would be a 7% drop to the next level. And if we are to look at the correction percentages down to here, this is the 0.5, let's say there to there, it would be 12%. So it's a decent trade to DCA, and again, plenty of time to do so. No rush putting more money in. Wait until you feel comfortable putting that extra money in, and then if you don't want to risk that double capital position, you can pull your stop loss at your entry point so that you don't have that worry. So it's either going, because the technical truth of this the technical truth of this is if it gets back above the 20 after back testing it, it is going to continue upwards, like what happened here. So here it broke it, it back tested it, and instead of coming back down, it went back above it, and it went back above it because it reversed. So if you moved your stop loss at the entry point here, you would have been protected. You would have had your capital protected, so you could do that when your full position is in, when you've DCA'd and you don't want to risk. Because that is the truth. Once it backtests an MA, it has to keep going. If it reverses, move your stop loss, protect yourself entirely, and then you'll take another position at another 0618 farther down the line. So that is another situation, another strategy for protection that I would use if I have if my stop loss is quite high in amount, not in percentages, because the percentage would be the same. But if I've DCA'd in and I have a lot more money in the trade, I would do that so as to avoid any loss. So again, because that would be the technical thing to do. I don't always do it. The only times I don't do it is when the 20 and my entry point are too close together, and that happened last week with Bitcoin. And putting a stop loss there would wick me out, and I would lose the entry even if it were just a wick up above for example, the likes of these wicks. So that's when I say no. I choose to risk that 10% because I know I'm going to make it, and it's going to take one successful trade to compensate for that loss. Anyways, you know this already. I don't want to be Agatha Christie. So here is where we are. Why am I going to XRP? Here is where we are. We are still holding level. It looks like momentum is slowing down, and what's most relevant for our trades today in terms of the market and its volatility is the data that will come out at around it is 2:45 UK time. So this would be quite impactful on the market. Then we have on Thursday, we have a big news day. We have the advanced GDP. And then on Friday, we have the core PCE index for the States. Big news days. I think on Wednesday, we're going to have a little bit of a break, but then the volatility will kick in on Thursday and Friday. So that's it. I didn't want to be so long, but I guess I just I went into a little bit more technical trading details, and I hope they're useful and they serve you this week. I'm going to be posting a quick update right now just to let you know on the chats where we are, and I'll see you guys tomorrow morning.